Okay, so a warm welcome to everybody. And this is Mohit Pajisia here. And for those who are watching this video on YouTube, please watch this video from end to end because I'm going to explain a lot of things and clarify a lot of things. And especially if you're new to algorithmic trading, this is going to be something which you want to listen to, which you want to see, right? Yash is asking, will you be sharing the recording with as well? So yes, I just mentioned I'm going to share this on YouTube. So it is quite obvious that it will be shared publicly and therefore it can be shared with you. Okay, so thank you for the question anyway. So yeah, I'm coming to Isha, I'm coming to the agenda. So first of all, a little bit about myself. My name is Mohit Pajisia, and the reason I've written CFA to the power of 2, CMD to the power of 3 is because I don't pay them hundreds of dollars every year to retain the charter or to get the charter. So this is what I've done. Like I'm educated in finance, quite highly educated, so to speak. And CFA being fundamental analysis, CMT being technical analysis, and EPAT is a course which speaks on quantitative methods. It's a long course on quantitative trading and quantitative finance, algorithmic trading, right? So these are the three different major courses I've done. A number of other things. A little bit about myself, that three things which I personally do, okay, is number one, I do a lot of analysis. I do a lot of research. I love doing research. Number two, I trade, right? So obviously when I'm doing a lot of research on algorithmic trading, I don't do manual trading so much anymore. And coaching is again one of my love. So I give coaching. I've been teaching since 2015 now. And it's 2022, so it's a long time. Primarily, I used to teach technical analysis, but now I teach algorithmic trading as well, and that's my primary focus now, right? So that was a bit about me. And our today's agenda, as some of you have been asking me, so basically our today's agenda is to go through the entire process in a nutshell, right? The screen is visible to you, right? The slide is visible to you, right? Udbhav is saying can't hear me. Let's just clarify this once. If nobody can hear me, 2-3 people should message it once, because otherwise this means that the internet issue is from your side. Also, if you message me that you can't hear me and later you start hearing me all of a sudden, please message that it's okay now. So I just don't keep looking at the message that okay, someone else is going to message, right? So everyone can hear me, right? Just give me a yes, quick yes. Right. I want this to be an interactive session. We'll go into the backtesting part where I'll require your focus. At this point, let me speak about overall aspect of things, right? If you have any questions, you can ask. So the entire process is something which you're going to go through, and our focus is going to be the core engine part of it. So whenever we speak about algorithmic trading, our general sense is that, okay, there must be something which is like a very nice algorithm, and it will give us very good backtested results. Right? So the basic steps when it comes to creating a trading system is going to be our agenda. For those who are very, very new to algorithmic trading, please understand that our edge, okay, and here our edge we're going to take as a moving average crossover strategy. That is something which is going to be our edge or our ideation to begin with our coding and come to the backtesting and the stat summary part. But this edge is something which is very important. For those who are new, I'll speak a little bit about the different types of trading which goes on and the different types of people who are there in the industry or participants who are there in the industry, and different participants. Like for example, to just give you one example, hedge fund would not be interested in a stock with lesser liquidity or medium liquidity, right? So they don't want to exploit those opportunities. So we, as individual traders and not hedge funds, can actually use our money to exploit those opportunities. Similarly, there are other types where there is a wide participation that is welcome. The edge gives you a lot of time to take the trade. You can move in a lot of money. You don't need to be a hedge fund or a high frequency trading firm for that, right? So we're going to learn about those things, right? The three types of frequency of trading. We'll come to that. So I just going to go a little back and speak about one basic part. Those who are over here, since a lot of them are following me from a lot of years, some of my are my past students and have learned from me technical analysis, manual trading, etc. Let me just speak broadly about algorithmic trading. I'm sorry for the spelling mistake. I apologize. The advantages are obviously speed and accuracy being number one. So when you're trading manually, what happens is that there is a split second at least which you will take to think and put your keyboard or put the thumb on your phone and execute a trade, right? That time lag is not there with algo trading. There's a lot of speed. There's a time you can take to think also, to view your maybe some scanner or some alert is there on your system, and then you want to take the trade, or you start thinking, okay, is this aligning with my rules or not, and the price runs away. So there's lack of speed when it comes to trading from a discretionary perspective. But when you are trading from the particular algorithm, which is completely automated, then it is happening on its own, and it is happening at the speed of light. It is happening at the speed of electricity. Okay, it's a very high speed. And when you have to take a stop loss, or stop loss rules are triggered, or your stop loss price is triggered, within a split second, the trade is being taken. So this execution is something which I feel is personally feel is extremely important. Right? Now, when it comes to reducing the human errors from the big finger point of view, like you wanted to buy 100 shares, but by mistake you bought 1,000 shares. Those errors are going away. There is no emotional bias. One tends to be a bit emotional when they are trading because obviously money is involved. And this bias is completely taken away, right? This bias is completely taken away. Next is there is a robust backtesting. So when I say backtesting, I mean, just like we're about to do today, we're going to backtest the strategy. We're going to see if our ideation or a simple set of rules, okay, and that set of rules could be based on a lot of things. We'll come to that in a minute. Those set of rules are giving me robust results over a period of time. That is something which is a robust backtesting. Now, in general, a discretionary trader, nobody is a fool. They also do practice. When I teach people and I see the students perform, it is an output of their real practice which happens. I keep telling them, go back to the charts and practice the same patterns and viewing the same patterns. So, however, if I go to the back to the chart and I view certain patterns, I can get a clear idea that yes, this pattern does make a lot of sense and it has a predictive value, right? It has a predictive value. But I cannot say from exact number point of view that had I put, say, for example, 1 crore rupees in a strategy, what would the output be if I let those trades run and perhaps even compound, right? So that robustness is something which the computer can give you, that sort of computing can give you. You can't sit with a calculator and do that. That is why backtesting becomes very, very important. The second part is optimization. So say, for example, I'm going to show you that I take, say, 2 moving averages. And how do I know that those 2 moving averages the most ideal thing to be taken? Now, what I can do is I can say, try a 10 and a 20 moving average. I can then try an 11 and a 19 moving average. I can then try a 34 and an 89 moving average. I can then try something and something and something. That's called brute force, right? So in the world we live in today, a lot of people are familiar with the term machine learning or artificial intelligence, okay? These terms are pretty much interconnected. And what artificial intelligence does is, it helps us to find out by running a lot of logics, one after the other, that which would be the ideal case scenario. What are the 2 moving averages which would give me the best results if I do backtesting again? Everybody clear about this? right? Just give me a raise of hand or type a yes. Everybody clear about this? This optimization part is something which I want to give as a message, right? Because people don't think in certain ways. A lot of people know that algorithmic trading is backtesting of certain idea and then applying it in the market. But oftentimes they don't know exactly what it is. And that gap is what needs to be covered, okay? That is why I teach, to cover a lot of gaps from the textbook or the social media what you read to the actual industry practice. Okay. So optimization we spoke about. One more thing which can happen with optimization is something called simulation. Okay. So again, that is an advantage. And we speak more about simulation packages which are used in Python. Yeah, Tushar Srivastav is asking little on backtesting. Backtesting is going to be one of the major things we're going to cover today. So be patient. We'll speak about it. We'll do backtesting also, right? So what is simulation? So when I backtest something, then I'm going to say that, okay, fine, this worked very well over the last 10 years or 5 years. Had I practiced it on this stock or a set of stock prices? But what about tomorrow? So we talk about simulation again when we speak about those packages. Right now, it's going to become a bit advanced, right? Bit advanced, right? Scalability is high, right? Scalability is very, very high. So what happens is when me and you are trading in a discretionary way, of course, to the limits of our psyche and the limits of our capital, we can pull up a lot of position together and say, okay, fine, I'm buying 50 lots. But then the buying 50 lots is not the same as 5 lots. So there is a performance gap which starts happening with discretionary traders beyond a certain leverage or beyond a certain capital size. Agreed or disagree? Agreed or disagree? Right? Jerome, I'll get back to your question, definitely. Right, agreed, right? You just type a Y, yeah. So beyond a certain scale, it starts becoming different because it's like walking on a thin rope. So if you're walking on a thin rope of above 2 feet above the ground, it's very easy, okay? Even if you fall, you're not scared. But if you walk on a thin rope between 2 buildings at the 10th floor height, you're going to definitely be scared. And that probably is going to trip you easily. That's what happens with a lot of traders. And of course, discretionary trading is kind of easy and approachable. So we think, oh, wow, let's do discretionary trading. But the thing is that if you come to algorithmic trading, the robustness is something which is difficult to challenge because you're showing numbers. Yeah, I'm going to show you numbers of my own strategy also. In the end, if we get time, something which I've been working on recently, and then you get like a very good idea of how good strategy would look like. Right? Around the clock trading. Okay, I have a problem waking up Monday morning. I think everybody does. Just raise your hands if you have a problem waking. I don't mind waking up early, but waking up and getting to work, it feels a bit tiring. And when I used to trade, completely, manual trading or discretionary trading, I would love Mondays. And this would be a problem. So I would try to exercise and get myself active, etc. Plus, also, I like watching markets of different asset classes where I feel I have some ideas. I always feel I can do something in the US market. I could do something in the currency market. But I can't wake up all night and wake up early morning for Japan every day to trade, right? So if I have automation with me, I can trade many markets. I can trade round the clock. I don't even have to be in front of the screen. That's the beauty. And these are the advantages, but we also need to, we are traders, we need to look at risks also, right? So what are the challenges? Where are the places where people find a barrier to entry when it comes to algorithmic trading? I'm sorry if for some people it is getting boring, but it will soon get very interesting. I need to cover the basics. The pace is fine for everybody, right? Yeah. Nobody's told me that it's getting boring. I'm just assuming that, okay, fine. The pace is fine, it's good. Okay, I got some thumbs up. Thank you. So challenges would be the technology infrastructure is something which please don't enable closed captioning. Okay, the technology and infrastructure is something which is definitely a barrier because a lot of people don't understand the technology part behind it. The good news for you all is that it is becoming less and less expensive to create a good infrastructure for even high frequency trading firms. What used to be a few years back, or the kind of availability which is there on cloud computing, etc. For the retail traders or for traders who are managing medium frequency and long-term frequency trading, it's literally at your doorstep in your trading account. Cloud computing API and a bit of guidance could just the deployment part make it very, very easy. And that challenge is getting removed. And what you can do is you can educate yourself to remove the challenge in the sense that not about the deployment alone, but how to backtest the system, how to generate an idea. You will always educate yourself more and more and come to the point where you are able to generate new ideas, have cryptic and smooth ways of applying those new ideas, right? So this is something which you can educate yourself and remove the barrier. The next is overfitting bias, which is something which I see very common with the IT people. Every few days I get a message, or every second day I get a message, somebody very educated in IT, probably from the IITs or BITS Pilani and all. And they say, okay, I have this is my GitHub profile. This is what I've done. With due respect, it's amazing what you do. Okay, amazing. But a strategy cannot just be groundbreaking strategy if you overfit everything. For example, when I say overfitting, I just took an example of moving average crossovers. And I said, let's take 10 and 20 moving average. Now, suppose somebody comes to me and says, sir, if you were supposed to take 12.9136 moving average and 36.78 moving average, it would be giving you the best results. Now that is overfitting. They're not even round numbers. There's probably not even a lot of logic to why you chose those two things, right? So those parameters which are given to you for optimization for feature selection, if they become a very overfitted model, then it can be a problem because later it will not yield you those results. And this is something which a lot of hedge fund industry people also face, that people approach them with very overfitted models and say, oh, please buy it from me. See, it works perfectly. So you just can't jump the hard work, and you have to focus and get valid results, strong backtested results with strong features. Okay. Next is regulatory and compliance risk, which is something which again we don't have to worry about a lot, as long as we know that since 2008, I guess, in India, algorithmic trading is allowed. So you can just go with it. And deeper aspects I'm not going to discuss right now, like pegging order, etc., whereas the compliance part comes again. So we could discuss that some other time. Next is market risk, volatility, and illiquidity. What I mean by market risk, obviously, if you're trading something algorithmically, somebody comes to me and says, I want to trade out of the money Bank Nifty options, right? And for some reason, you made the mistake of assuming that it'd be very, very liquid at a point in time where the contract is still far away, very far away, and probably the bid-ask spread is pretty high. And you somehow made the algo not eliminate those points, and the illiquidity risk started to hurt you all of a sudden. Or you want to apply your algorithm, which is working perfectly fine on a very liquid stock, onto a mid-cap stock or a small-cap stock, which is highly illiquid and has higher bid-ask spreads, right? So then those things could be a problem. But I guess if you are covering the market section, understanding section with me, this is something which you don't need to worry about. This is something which I want to say more because a lot of IT and pure IT people are here. So I just wanted to tell them that, okay, there are a lot of finer aspects of the stock market also, as well as finer aspects of the technology, which both need to be considered, right? And the end is cybersecurity, again, a bit self-explanatory, and this is not something our focus today. So I'll move on from here. So these are the few challenges, and there are a lot of advantages, and clearly the advantages outweigh the challenges, right? Clearly, they outweigh the challenges, right? So this is something I wanted to speak about. Now, zeroing into the different types of trading. Now, what are the different types of trading strategies which usually you would find? Right? Usually, you would find different kinds of trading strategies like high frequency. You must have heard high frequency trading. A lot of people have heard high frequency trading, but they don't know exactly how the high frequency trading strategies look, or how they're modeled, or what the models are. Okay. So a lot of it is high frequency when it comes to the volumes of the high frequency trading firms. There could be market making strategies, there could be arbitrage strategies, there could be very low latency strategies. When I say low latency, means you cannot afford latency, you cannot get too late. You have to, they are fighting for the speed. So those kind of strategies are there. When it comes to market making strategies, those strategies again involve a lot of sophisticated coding. Most of that is done on C++. In fact, you can backtest it on Python and then apply it on C++ because it's a bit faster. So high frequency trading is a space which you need to be with a high frequency trading firm, have the technology which supports high frequency trading. And that would then become something which will be in your grasp. The next thing is medium frequency trading, or mid frequency trading, as they call it. So mid frequency means taking positions for either intraday short term, or at the most you could say a couple of weeks, a few weeks. Okay, a position takes, and you enter the position and then you exit the position in a few weeks. Sometimes like in my case, what I would categorize mid-frequency trading. For example, my trading rules say I should enter a trade. Okay. So I enter a trade, but the exit happens tomorrow itself. My stop loss is very small and it hits my stop loss tomorrow itself. And when I enter a trade in another scenario and it hits my target in a very nice way, that means all my parameters are also meeting, then it starts moving towards my direction. Suppose I have a trailing stop, it does not touch the trailing stop loss. And after a month, the trade gets closed with a handsome profits. That would also be medium frequency trading. Okay. So a general idea of the time frame or the holding period is there. Now, when you're doing the backtest 7 year, you also calculate the average holding period. Okay, those are a bit advanced things. We're not going to do that now, but I'm going to show you that. Okay. What we'll do is the basic backtesting. The last is low frequency trading, or LFT. These could also be like investments, or there are a lot of firms who are working on, and funds, hedge funds, etc., do already work on AI based, or computer based models, basically computed models through AI and optimized through AI, which highlight those stocks which should be in a portfolio, taking in features like macroeconomics, economic tricks, etc. Okay. So again, we have another discussion, deeper discussion of that some other time. But that would be categorized as low frequency trading also. Right? Another type of low frequency trading could be that you are entering and exit a stock, say two times a year, and your algorithm is designed like that. The net result is that when you backtested it and when you are applying it, you want to beat the markets and generate the alpha. Okay. So for example, there's a low frequency trading strategy. The market is given minus 10% return in that particular year. And the same market on which the LFT strategy is running has given minus 2% returns. Market buy and hold would have given you minus 10% return. The strategy gave you minus 2% return. It is still beating alpha by 8%. Getting the point? Are you all with me on this? So everybody is looking at alpha. In high frequency, you look at immediate profits within seconds. In mid frequency, you want a profit every quarter or every week or every 6 months, right? And in low frequency trading, you want a profit practically year on year, right? Something like that. Everyone with me on this, right? Just type a Y or give me a reaction. Okay, so I have some questions. Let me just quickly take the questions and then we go to my Jupyter notebook and we do the backtesting, right? So I'll take first question would be by Jerome. Hi Mohak, would you also be showing the process of algo trading demo and your plan for us? Okay, so two things. Let's start from algo trading demo. Can somebody show you? Well, if I were to tell you, I'll show you the algorithmic trading demo. What happens is the trade automatically gets taken. Okay, so suppose my trigger is a mid-frequency trigger, and I don't know when the trade is coming. So I'll have to put you on the webinar with the particular screen. And whenever the order is generated and executed, you will see in the order section quickly the order is generated. So showing algo demo would be something like that. But something better would be to show what the entries and exits are or have been in a backtested result. Okay, so this is, I hope you get my point. Yes, if I'm showing you a HFT trading or a very intraday trading, then you could see it within a day and spend hours to see it. Within those window of hours, you would be able to see it. So I don't intend to do any of that, but I'm just giving you an example of what you're asking. Okay, and your plan for us. So a new batch is starting in April first week, where I will be there for most of the part. And there will be another teacher for machine learning part. I'm going to be teaching from starting to end how to pull the data, all things about the data, all things about the visualization, Python for trading, algorithmic trading, and then in the end, after backtesting, there'll be optimization, some from my side, some from the machine learning teacher side. And then finally, it'll be deployment. So once the students complete the course and they work on the strategies and they come up with something good, they can get it deployed from elsewhere, not a problem. If they want, then we can assist you with the deployment because our team members have a network for deployment, right? So that will be a separate cost as far as the fees is concerned, but the deployment is something which we can give assistance on. So if somebody wants to get empowered and enabled to be able to completely do algorithmic trading by themselves, or even give it out to clients, that is also fine. That could be something which wonderfully do. I'm certainly working on strategies, and some of them I intend to. I've already spoken to some people who are interested in buying it outright. And when you're doing things with public money, or you're giving it out to someone, you need to be very, very clear and crucial and critical with the health of your strategy, the health of your coding, etc. So this is the line on which I'm working on and can empower students to work on, right? Besides that, yes, free webinars and YouTube videos could still keep coming in whenever I get the time. Okay, next, Udbhav is asking, so what is the difference in the technology required for these types of algo trading? Do HFT have / require proprietary technology? Thank you. Okay. Now, proprietary technology, yes, they have. Yes, they have. The cost of the cost of the course would be 30,000 rupees, but there'll be an early bird discount. So I will announce that in a week or so. I'll announce that. So the early bird discount will be there also. Mostly 30,000 rupees would be the cost. Okay, so Udbhav, coming to your question, it's a bit advanced for our audience, but in a nutshell, I'll tell you. So yes, HFT firms have their own proprietary technology also. And not just HFT firms, even MFT firms can have their technology. How do you define technology? A technology could simply mean a software on which certain deployment is going on. So that could be there. There could be something to do with the user interface. That could be there. There could be something to do with the market adapters. That could be there. So certain general things you get out there, you can just do Google search, you can read sophisticated books and find out. But certain things are secretive, proprietary, intellectual property of the firm, which never goes out of the firm. Okay. Legally, also, the employees are not allowed to leak out any stuff about it. Okay. So this is something you got to be very careful about. That you can't just you can do things by yourself. You can't just ask somebody what is going on inside your office unless you are an employee yourself and have the legal rights to the intellectual property. Okay. Yeah. And as far as okay, so I completed your answer, right? I answered you whatever you wanted to ask. So Rakesh is saying, do you have a common group like Telegram or somewhere? Oh yes, by the name of Technically Sorted, we have a group on Telegram. It's not a group, it's a channel. The groups I have with students who have done my course in the last 7-8 years. Those who have done the courses with me, for them I have groups. But for open public, you can follow me on LinkedIn. You can follow me on Telegram. I'm more active on LinkedIn these days, especially because I get to share a lot of presentations from time to time, right? So that is how it is. Plus, I will be giving you the team number, official number of Technically Sorted. You can just connect, send a WhatsApp, or schedule a call with me personally through my personal number also. More than happy to help if you need to ask questions. Okay, so let's jump into our back testing now. Questions are done. And if you have questions, more questions, you could ask, right? So we are going to focus on our strategy building. And our example today is going to be, our edge today is going to be mostly around moving average crossover. Now, everybody over here, kisi ko lag raha hoga ki okay, such an easy trading idea, right? Sir has taken up such an idea. How will I get an edge which I can apply tomorrow? Or probably if somebody has that kind of expectation, please note that very, very good strategies, maybe they are simple, not over complex, but there is still a level of complexity which comes in when you are starting to code something which is robust and something which is got different various parameters. Okay. So what I'm going to do is take two conditions and use those two conditions to show you how conditions are put in the coding and while coding, and then how the output is gotten from that. Okay, how we get the output. So this entire process also has parts and subparts which you need to learn. And when we are doing something which we aim to do complex, okay. So for example, I'm building a strategy where I use, like 40 or 30 technical indicators, out of which 5 or 10 indicators are major filters. Some are just minor filters or some together are filters. So that becomes too big, right? So how did I start? I also started with learning something which is basic and something which can be done. Okay. So if you think, okay, fine, can I use this? This is not particularly a class today about how to look at an edge. For that, you can see my other YouTube videos. You can just type my name on YouTube and get idea about technical analysis. And the second question is, what is the difference between technical analysis or quant analysis or statistical analysis? Those things I'm going to come to. So be patient for that. Okay. That could be a question. So I just addressed it. Okay. So I'm just sharing my screen. Again, this one. Okay. Everybody can see my screen and my camera, right? Okay. Okay. Everybody ready? Those who have their Jupyter notebooks, etc., probably are sorted with it. Those who don't have a Jupyter notebook, everything about Python is open source. So you can download, install Jupyter notebook, Anaconda. And those who are not familiar with technology, I can guide them separately offline. But this is how it is done. Okay, so what I've taken this example and let's start over here. Let me just change this cell. Okay, so these are the libraries. I'm typing as I speak. So just be patient and try to follow. If you have questions, ask, because my chat box is right there. Okay, libraries. So these are the libraries which are being downloaded, which are being imported. So number one is pandas as PD. Now this PD is an alias. I could very well write Mohawk pandas as Mohawk, that would be fine, right? Import numpy as NP. So what is pandas? Pandas are very helpful when it comes to Python programming. You could have various IDs, you could have various packages, etc. So there's something called data structure. So a number or an integer is a data structure. A number which includes a decimal, say 22.5, is also a different, it's a different object, basically. Okay. So there are a lot of objects, and when it comes to data structure, there could be a tuple, there could be a dictionary, there could be something called a data frame. Now, this is what Pandas enables us with, a data structure which is called data frame or DF. So what we are going to do today is, after these libraries are being imported, which will be used for our coding. So generally, this is the set of libraries I use. Maybe I need something else, I do that. Okay. Then we are going to have, so locally I have on my computer stored a CSV file. Okay, a CSV file. A CSV file, comma separated values, not necessarily an Excel file, a CSV file, which has got the open, high, low, close. Now, when I download the data, Pandas helps me convert that into a data frame. Okay. There are other ways I could download the data offline, not locally. I could get the data from the internet through Yahoo Finance. Yahoo Finance is just an example. It's not necessary you have to use Yahoo Finance. Okay. You can use many other places also you get. And there are certain hiccups or finer problems which you need to know about. So Yahoo Finance is great for practice and everything, but it is free data. Sometimes free data can not be so reliable. So that is number one. Number two is, when we are web scraping the data for the data, we're using the internet, and from one single IP, you get so many requests. Okay, give me this stocks data, give me that stocks data. Okay. So that time the website tends to think that, okay, maybe there is some problem, there's some sort of a attack which is happening, and it blocks the access to the data. So in a one point in time, you can't download a lot of data, and sometimes that is an issue. So what I do is, generally, suppose I have to go to download the CSV file directly from the internet to my computer. I do that for backtesting, and I would rather store it particularly in my computer only, right? And then call it over here. So this is what we can do. Jerome has a question: are these libraries available in TradingView or which platform? Okay, so TradingView is a charting platform. You do have some code scripting in TradingView, but that is done in a different language called PineScript. This is different. These libraries are specific to Python. These are openly available libraries, and they are very different from what you're talking about TradingView particularly. Okay. And as far as visualization is concerned, since we spoke about TradingView, so you can make your own charts in Python also. And I'll show you how to do that. So now coming to downloading data part. So there could be ways I could download data. So this is the path to the data I have in my listing. I just saved it in a file on my desktop. So I'll just copy this, and on a cell, I'm going to write, let's name it data frame. Data frame is a variable I am giving it. I could call it anything, right? Let's name it data frame. Second, pd.read underscore CSV. And over here in this, I'm going to run this pd underscore read CSV. And I'm going to give the path over here. Now, how do I give the path? I have to give the path not like this. I need to give the path within quotes, right? Now over here, it might throw an error, and I'll tell you why. Okay, so this is throwing an error. So here I need to put an R, just tell this is the raw data, the raw link, okay, the raw path basically. So this raw path is being done. So df is ready. So let's just put df dot head. Dot head is a function which gives me the top five, data points, the top 5 rows, 0, 1, 2, 3, 4. 0 is the index, and so on. Right? So this first column is the index column. Then we have the date, we have the open, high, low, close. Okay, is the pace fine for everybody? Those who are very, very familiar with the with pandas and Python, probably for them it will be a little slow in the beginning, but for everybody, I hope it's fine. When we are looking at a language, okay, we need to go to the depth. We need to understand the small things. So what I'm going to do, generally, when we are looking at data, we like to keep date as the first column, right? So then within this, I'm going to pass another argument that index underscore column is equal to 0th column is the first column. So the first column is actually date, or the 0th column, but it's giving separately the index to me, right? Then yeah, I'm going to come to matplot and everything. Matplot is going to be used when we do visualization. And then we say parse underscore date is equal to true. When I pass parse underscore dates equal to true, pandas does what is it tries to find out where the date is, in which of the column is the date, and assumes that as the date, index underscore column is equal to 0 is already given. So let's just run this. And now I run this cell again. Voila. I got date, open, high, low, close. Is that clear? Right? Okay. So NumPy and find pandas. So NumPy is used for a lot of numerical calculation. I'll give you a small example of that. Date time is dt. So I generally have this set. I'm not explaining this because all of it I'm not going to use today. Okay, but generally is the set. Those which I'm going to use today, when I use them, I'm going to talk about them. Okay, and later if you have questions, then again I'm going to answer you. Not a problem. Okay, so this is our df.head. Let's do df.tail. Now, what is the first observation which you have over here? The first observation you have is what over here? Please tell me, what is the first observation you can say? What is right with the data? What is wrong with the data? Anybody? I want you to keep your eyes and ears open. This is going to be something important, especially for the people who want to break into algorithmic trading. And there's so many final points, but as far as this example is concerned, this is the final point. These are the final points for our today's examples. What do you notice? I noticed that the dates actually start from the latest date, near 2022. So again, this is something which I don't like. How do we generally like our data? We want to start with the older data first, and df.tail is the last 5 element. Okay, the last 5 rows are there. All right. So excuse me 1 second. Okay. Drink a sip of water. So df.tail is last 5 rows. Okay. So I'm going to just delete this once. And what I'm going to do is I'm going to override df, which is our data frame, and say that data frame is equal to a range of index starting from back to front. Now, I'm not going details into this, but this is something which I will explain in the course. This is something which we need to do to reverse the order of the data. And now let me do df.head. So now I will see that 2000, the year 2000 dates come in the front. Now I like my data like this, because if I have to plot a graph, if I have to backtest the strategy, I have to do from back to front. Okay. Everybody clear till here? Everybody clear till here? Right? this couldn't get more real. So just please pay attention. Now, if I have to see the top 10 in the data, I could actually see df dot 10 and I could see a longer set. Now, quick checkup, a small health checkup on data frame or df. Okay. So df.info, df.describe. Okay. So df.describe tells me what are the general stats over here for each and every uh, column. So if you see the number of cells which are there, in the open are 5, 6, 4, 5, and so are there for the other ones also. So this gives us a certain idea. It gives us that, okay, fine, that all these are equal over here. Okay. And this helps us understand what is, inside the thing. So df.count is next what we'll do. It is going to count the number of things which are there. So once I'm going to say that, okay, fine, this is generally clean data, right? This is generally clean data. Generally, people, when they download data from places, there could be data which will have NaN or not a number values. That means all these rows and columns may not be filled. If those rows and columns are not filled, then it will show NaN. Okay. So what we're going to do is, a general practice is to clean up the data where no NaN values, because it will give us problems when you do computation. So we say df.drop Na, and it drops all the NaN values. Now after the drop Na, and inside the drop Na, I will write in place equals true. This is something which I'll do again and again after I put the technical analysis indicators also. Then I'll do again df.count, and if it gives me the same number, this means that all the cells, what does df.drop NA do? It drops all the rows where there is not a number value. Okay. It drops all those rows. So if there were any rows like that, it would have dropped then, and now it would have shown me lesser number of counts of each of these different columns, but it is showing me the same. So that means the data was clean and did not have NaN values. There could be other things related to cleaning up the data, which are going to be much deeper. For now, I'm not going to discuss them, but this is enough for now. Okay. Now let's understand this. What do I need for a crossover strategy? I need two moving averages, right? Okay. If somebody is curious about what is over here, this is a hashtag, and then so if you're commenting and you're not running the cell and you don't want this particular code to be active, you want it to just be there like text, you just put a hashtag and it's like a comment. Okay. I'm going to get back to this. This is an example of how to download data from Yahoo Finance directly to Python. But if I have time, I'll get back to it. Is that okay? Right now, we've got our data from our CSV. And from the beginning, let's just run all the cells. This is again a healthy practice, right? All the cells, and see everything is working fine. Perfect. Now, when I'm addressing or referencing one of the columns, I generally say, okay, fine, df high, df low, etc. Okay. So I'm going to make a new column. I'm going to say df 50 moving average. So I'm writing 50 MA. Now, what is 50 moving average and where am I calculating over? First of all, I'm calculating over the close. Right? I'm calculating over the close. And then I say dot rolling. I'm going to explain what I'm doing right now. Dot rolling, dot mean, and voila. So 50 moving average is, if I take the close column, okay, and this dot rolling gives us the rolling or the running stats for whatever we ask. So I'm asking for the running mean of 50 rows. So every 50 rows, it is going to calculate the running mean. Okay. And similarly, what I'm going to do is I'm going to write the same thing for a, say, a 150 moving average. Is that fine? Understood? Right? Or let's just make it 90 moving average, right? 90 moving average would be better. Yeah. So our goal over here is not to get which best moving average is. Our goal is to see how the crossover strategy could be backtested. So voila, we got this. Now let's do another df.head and look at what we have. What do we have over here? NaN values, not a number. Anybody can tell me why there are not a number values over here? Anybody? Anybody? Anyone? Okay. Basically, the not a number values over here are there because it will take at least 50 closing prices for calculating the 50 moving average, right? Now, when I do df.tail, I see everything will be filled, then it will not be a problem, right? So what I'm going to do is just to give you a strong idea, okay? I'm going to first plot the graph. So I've already imported matplotlib, okay, the matplot library. The matplot library is a library which is a visual library. It helps us with the visualization, data visualization. There are other libraries like Tableau, Seaborn, etc. And Seaborn is developed on matplotlib. So I'm not getting into the technicalities of matplotlib, but we're going to use what we have imported, and we are going to create a graph using the closing prices. So close, okay, comma, df 50 MA screen is a different angle, or I could just write this also. Need not write this. Coding is about how fast you can get things done, how easy you can make the complex things. Okay. I'm sorry, the angle of my screen. Just a second, I'll have to change the angle of my computer to where I'm sitting. I'm not being able to see my own screen properly. Okay, this is fine now. Okay. So, so for example, I'm going to plot. Is my voice on mute? Oh, my video is on. So, for example, I'm going to plot only the close. So that would be a df dot close, and this will be dot plot. And what's wrong? I think the capital letter of close I've not put as capital letter, right? And this is second. Yeah. So this is how the closing price is, right? Now, if I say df 50 MA, right? Dot plot is going to plot the 50 moving average with this. Similarly, if I'm going to say plot the 90 moving average with this, right? Then it is going to be like this. So it will take, say, 90 days for it to calculate the 90 moving average. It's a very long-term graph, so we can't see it. So what I'm going to do is the initial to make sure that what we have over here are not a number values, we are going to again do drop NA. So let me just add another cell over here. I'll just make a fresh cell, okay? df dot drop NA in place. When I pass in place equals to true, what it does is it takes this as a as a overriding on the previous df data frame. So okay, if somebody is asking, the one you are plotting, is it MFT or LFT? Okay, so this could be categorized as an MFT. Okay, we are using 50 and 90 moving averages. This could be categorized as an MFT. Okay, so we've got our things, we've got everything. Let's just do df.head once again. And now what do I want? Now what do I want? I want to see that every time 50 moving averages crosses 90 moving average. Every time 50 moving average crosses 90 moving average, I buy. And every time 50 moving average crosses 90 moving average from above to below, I exit. So I buy, I exit, I buy, I exit. This is my trading strategy. I'm not taking reverse positions. I'm simply buying and exiting. Is everybody clear about this? 100% clear, right? I'm buying and exiting, I'm buying and exiting, right? So in order to do this entire thing, I need to code something, right? There are two ways I can approach it. When I speak broadly, when I speak specifically, there are tons of ways I can approach it. Unlimited ways I can approach it. To each his own, very individual thing. Okay. So what I'm going to do is I'm going to create certain variables. So let's start. Position would be one variable I create. In the beginning, I'm going to keep that position to be 0. If somebody has a question, if I'm doing something by the vectorized method, this is not the vectorized method. Some other time I'll show you the vectorized method, right? But this is a loop method through which I'm going to run each and every row, or rather the data of each and every date, and then I'm going to get my results. So I've got position is equal to 0. Then let's have a variable for the number of trades. The number of trades in the beginning are 0. Now this is later going to be, I'm just commenting from with a hashtag here. It will be 1 or 0. So I'm going to keep the position either 1 or 0, where 1 would be I have a position and 0 would be that I don't have a position. And this trades, I'm going to keep 0 right now. Later, I'm going to add every time I close a position to the number of trades. So this is the number of trades, total number of trades. Okay. Then let's have this thing for buy, or let's say buy underscore prices. So buy underscore prices would be a list. So if you see right now, it's an empty list. I'm going to append the list. And then I'm going to say sell underscore prices. Again, I'll make an empty list. Later, I'll append the list. And the most important is going to be returns. Okay. This is something everybody would likes to see, what the returns are at the end. Right. So these are the things I'm going to, I'm probably going to add a few more variables, but I can do that a bit later also. So this is the core essence. And when I put return, you see it is given a green signal. Now this green, in green it has become why? Because this is not something I should be doing. I should be saying returns and not return. Those are keywords in Python. Return is a keyword in Python, so can't be a variable, right? So this is something which I will do. Further, I'm going to expand on this. Let's further expand on this. I'm going to start with a if loop. If loop. Okay. Sorry, I'm going to start with the for loop and then later put the if conditions. Okay, now let's understand this. Should I not first be able to code the conditions and later and give them smaller variables? Okay. I'll code the conditions and give them smaller variables. So later I don't have to worry about it. I can just write one word and the computer will know, the program will know what the condition is. right? So let's start the for loop for I in index, in df dot index. So when I say for I in index, it is going to run through every element, calling it I. This is a fresh variable I've given for this particular for loop. I'm going to call this I, okay? And every row it is going to run through. Now, let's first define our condition. So condition, let's call the condition as condition 1 and condition 2. So condition underscore 1 is equal to, what is the condition? Then the 50 moving average should be greater than the, the 50 moving average for I should be greater than the 90 moving average at the index I, again for the index I. Okay, so every time the I changes, everybody with me on this? Just type a yes. Everybody is with me on this, right? Perfect. Now, so this is my condition number 1. If this is met, okay, if this is met, then I'm going to build up on this. And 90 I should be writing properly. I've not written this. I'm sorry. Yeah. If this is above 9, and let me say condition 2. What is going to be condition 2? It is going to be the opposite of it. So I'm just going to copy paste and change the signal, right? So, and just if somebody has a question in mind, sir, what if 50 and 90 are equal? I'm not saying that, one of my students, he asked me this question once. So I said, okay, इसमें एक equal to कर लो, is greater than equal to कर लेते हैं. Okay. Generally, they probably, it's not impossible to be equal, but generally it's not, because you see the precision of these numbers go to 5-6 digits. So it's difficult for it to be equal, right? Okay. Perfect. So these are the two conditions I have particularly put. When I put the conditions, I have defined the conditions very, very clearly. I'm going to define one more thing, the close price. So as another small variable, because I'm going to quite often use it. So let me just say close, just naming it close. When I say close, it means df close for I. For I. And I'm just putting these conditions in brackets just to make it look a little neater. So I know this for loop is going to iterate through the entire code, right? Now, time for the if loop. Now, for everything, it is going to iterate through. Let's type if after a space so that you can see it clearly. If condition underscore 1 is equal to, so when I say if condition, I need to say the computer needs to understand what I mean by if condition, right? So if I say if condition, in general terms, if you don't do it in a very neat way, that is also fine, but it is better and it sometimes throws error. So I personally like if condition equal true. Now what is equal? Equal means that, okay, comparative. It is not that I'm defining that, oh, condition 1 is true. When I say true is a keyword. That means this entire condition, which has two comparatives, have been met. And this double equal to is another comparative. Okay. So this has been met, colon. And now if you see Python has indentation. So I'm going, this if loop is nested within this for loop, right? So what am I going to say? What other condition should be there also? So there should be another condition, and position is 0. So is equal 0. So if we know that there is an existing position, I don't have to go through this condition number 1, because I know that already a trade has been taken. Okay. So if and only if their position is 0, that means there is no existing position, and this condition is true, I'm going to buy. Everybody clear on this? Everybody, yes? If this is true, I'm going to buy. Right. Fine. So this part is done. Now when I'm going to buy, which price am I going to buy at? So I'm going to define the buy underscore price. Now here it's a new variable because this was buy underscore prices, and this is buy underscore price, and this will be close. Close is this which I have defined. So I don't have to write I every time. And here my position will now become equal to 1. Right? Perfect. Understood? I'm also add something to this list. So I'm going to add buy underscore prices in the buy underscore prices list. I'm going to write, or append is the function to add something to the list. I'm going to add buy underscore price. Right? If you have any questions, you can ask. This is something which should be very clear. Now, when I'm going to print out all the results, all the output of this particular block of code, I'm going to see something. So I better print out something which is logical, and then, go ahead with this. Right? So when I used the and, that means I made two different things, two different conditions were met. One alternative way I could do it, that if this is true, then I could go to the next line and write if position is also equal to 0. This is called a nested if loop. And here, all these things would together be nested under that condition. Okay. Now, if condition 1 is equal true and position is 0, one thing, it is already taken a new input. So let me just print out that we have something fresh, long, at what? At this price. Right. Okay. I'll just write fresh, long for the sake of brevity, so that everybody understands. Those who are new also. So I write that. If this condition is true and the position is 0. So if this condition is true, it may be possible that we already have a position and this position is 0 comes later. So let me write here print already long. Okay. So if it is already long, it will print already long. Otherwise, it will print already long and then it will say fresh long. Okay. Make sense? Okay. So this condition comes under this particular indentation. If you can see the indentation, under the same indentation, I will have to write my condition number 2. That is, if condition 2 was true, what would be the case? Okay. So indentation is something one has to be very careful about, right? So condition underscore 2 is equal to true. Then what do we print? Exited. Let's print exited, because we are not going fresh shorts. If condition 2 is already true, then we type exited. Now, if there is an exited signal, that is understandable. That fine. Condition 2 being met, there's no point of going long. But what if I was already long? What if I were already long? Right? Then I'd have to be sort of thinking about it. What if I'm already long? So if position, everybody following me, is equal 1 already, then I have to close this position. So let me define sell underscore price is equal to, at what price do I close this position? At the current close. Then I say what is the position now? Now that I've closed the position, it was earlier one. Now the position is equal to 0. I'm setting it back to 0. And then I'm saying cell underscore prices dot append cell underscore price. So I have appended the list with this last price. Works? Understood? And let's print exited the long position. Okay. So I've printed this exited the long position. So this is this is the for loop under which we have one if loop. Okay. And also if this loop is not met, so we generally call this elif. Even if we let it remain if, it is fine, but it is generally called elif. Okay. Now all the conditions are met, all the parameters are taken. Everybody with me on this? Everybody understood what is going on? Any questions? Anybody? How many of you over here are professionally into trading and want to get into algorithmic trading at some point or in the near term? Just give me a raise of hands. Okay. Yeah. Okay. So I prefer not to use any third party for coding. So AmiBroker is great for software backtesting. Every backend thing uses its own language. I personally prefer not using third party for coding. For backtest, yes, if they have the facility, figure it out and use it. Okay. Replying to else if. Replying. Okay, so if this condition is true, right? If this condition is true, then we print that it was exited. And also if this is true, that there is an existing position, then I need to, okay, if you have any other questions you ask, then I'm moving on. Okay. Then I need to close the existing position, and move on. Now what happens if towards the end, okay, if towards the end there is a position that remains open? So we'll come back to that and do something. One thing which needs to be done, the answer which I was actually expecting was, where are the returns? Sir, profit कहाँ store करें? सब कुछ तो हमने कर लिया, profit ही store नहीं किया, ठीक है? So let's just do one thing, that once we are clear that we have sold the current position, we will append the returns list. Okay. So the returns list needs to be appended. Returns dot append. Okay. What do I append it? We append something which is the sell price, sell underscore price divided by the buy underscore price. So if I've bought something at a lower level and sold it at a higher level, suppose I bought something at 100 rupees and I sold something at 105, then I made a 5% return, right? Now, when I'm doing any kind of backtesting, it is always better to take percentage returns rather than the absolute figure. Now, when we take the percentage return, we need to calculate it. So sell price by buy price, in our example, that would be 105 divided by 100. That would become 1.05, right? 1.05 needs to be subtracted by 1. So we get 0.05, right? And then we need to multiply that by 100, right? Whatever we get, we need to multiply by that by 100. So we'll multiply by 100. So another bracket goes here, another bracket goes here. I hope everybody is clear, right? Multiplication side here. Yeah. Condition underscore 2 is not defined. Condition. Oops, spelling mistake. Yeah. So we get this long list. It says already long. Buy prices dot append by underscore price. List is no. Okay. Append is something I missed out. Just be patient. So then we see this code. Okay. Now our code is ready. It's working. Okay. Sell underscore prices is not defined. Small spelling mistakes here and there. Sorry for that. Now we got this. Perfect. Our code is working and it is there out there. And since I have given out everything over here, let me just separately type a print returns. Okay. So our returns dictionary, our returns list will be printed also at the end. Everybody with me on this? Okay. So this is how the backtesting is done, and we're going to make some graphs and create some summary out of it. So everybody with me, just type an enthusiastic yes, because we've got our what we wanted from the code. And this last list in the end is the percentages change because of the profits or losses, right? Just give me enthusiastic yes if you understood everything. Now this is that simple. I mean, it takes time for you to get the hang of it, but it is that simple. Now, if it was not me, if it was you, if it were not just one condition or two conditions, the multiple conditions, the process would have been similar. Okay, it would not be that difficult. So हम ये देख सकते हैं, we can see what the result has been by looking at this particular list. Okay, this is this thing, and we can smoothly see that here we have clearly. So starting mein, it said exited because the conditions were not met to start taking a position. Here a position was taken and fresh long happened. Okay. Now suppose I said that let's do fresh long and we say fresh long at and then add another space and say okay, buy underscore price, right? And if I say instead of fresh long buy underscore price, oh here let's do fresh exited the long position at space sell underscore price. Okay, and I run it again. Here I will get the prices also. Okay, so at buy underscore price fresh long at 1286.7, and then I exited this position at 1136. You see, it's a losing trade. Then there is no trade, it's exited only, right? Then after many days, I take a long position at 1098.7. Then I exit at 1049, again a small loss. Okay. Then I take a long position at 1058 and then I exit at 1030. You can see the number of small losses till now. Now next one, I get a gut feeling that okay, fine. Now the market could have been up and down these two moving averages and then gone. So 1133.8 and then we see that 1853. Yeah. So my gut was right that we got a position with a big profit. So in the end, when we have printed out the returns, so we can see that the first position is a small profit, then loss, and then a big profit of 63%. Now this sounds or looks a bit unreal, but we're not getting into that part. We're going to see the authenticity of the backtesting. That the process of backtesting which we did was authentic. Okay, so let me just print the returns separately. So what I'm going to do is I'm going to print the returns separately. So this is now all these numbers seem a little too big. So let me just do when I'm calculating the returns and when I'm appending the returns, let me just put another function over here called round and make it, make all of this into a round number, rounded by 2 decimal places. Okay. Sorry, some mistake. Okay. Second. I'll round it separately in another loop because there's too many things on the screen right now with Zoom going on. Okay. So finally, I could, get the list of the returns. Now, what if I want to change this into a data frame? Okay. So I can change this in a data frame. Let me just call that returns only. Returns equal to changing this into a data frame would be pandas.data frame with this particular syntax and type it. Excuse me. Excuse me. Yeah, here we go. And if I now say, if I now print out returns, it is going to show me a data frame. Okay. So this is these are the different returns. Now, what am I looking for? Okay. Yeah, we can have a list of the results we can have, right? There needs to be a time frame on the chart for the trade entry. Does the candle need to close after the particular time frame? And there could issues of the latency and above factors. So Jerome is saying that time frame on the chart for the date of trade entry, does the candle need to close after the particular time frame on the chart? So at the close, as suppose the trade, the algo is running live. If I put the condition that at this close, at the 60th second of the minute, the 60th minute of the hour, the last hour of the day, if I'm suppose checking that this is the close, okay, so when we do the deployment to the person who's writing the deployment code, probably would assume the close to be 2 seconds or 3 seconds before the close and then, put that trade. Or if my conditions are that if the on the basis of the previous close, then it's again a different matter, right? So this is something which you're talking about. These are the minute conditions which could be there according to the person who's creating the code. Nothing wrong with it. Everything can be done and everything should be and could be thought of clearly as to what you want. I hope that answers your question, right? So about the issues of latency, etc. In the long run, the close price and the 3 seconds before the close price, whatever the small difference is, in the long run, that will take care of itself, right? Okay. I hope I'm clear, Jerome. So these are the returns, as you can see very, very clearly, right? So if I were supposed to make a net total sum of the returns, would that make sense? Right? Or if I would just simply be able to plot the returns. So when I plotted this thing, now returns.plot may, it will give back an error. So what I need to do is I need to plot the 0th column of the returns. Okay. What is happening today is a lot of spelling mistakes. Okay, so these are the returns, the different returns which I get. Again, this plotting is okay. It's not that representative. To make it more representative, what should I do? What should I do? First of all, let me just increase the size of the graph. Okay. 10 by 6 would be fine. It will be a rectangle. And instead of returns returns and the 0th column, I can make the cumulative sum. So you've got this in Python, the cumulative sum of all the returns. So these are how the returns look like, right? Right. Right. Okay. I have got another question by Jerome. I'll come back to this. What you're saying is that, okay, let me just answer this. Here's more thanks, but testing a real trading atmosphere could have different results than results that ones are showing coding which you have shown. Okay, yes and no. If you're saying that the numbers will be different, the prices will be different, the price movement will be different, then yes, it will not replicate the result. But if you were running this code, say 10 years back from now, and you were doing everything what has been done over here, assuming we are looking at spot prices alone and trading is being done on the spot prices alone, then they'll be almost near or exactly the same as what we are calculating. That is what backtesting means. Maybe the previous question which you asked, maybe I did not understand that. That is why you are coming up with this answer. And this is a very long term or an NFT. So every few months it comes 50 and 90 moving average. Every few weeks or months these trades are taken. I don't think latency is an issue over here. Okay, YG is asking how to enter and exit. Please show on charts instead of numbers. Okay. Okay. So, okay. Makes sense. Makes sense what you're saying. So when we do technical analysis parameters and technical analysis indicators, at that time, uh, it could be shown on charts. Okay. But I'll just give you an example. So here we've got the 50 MA, 90 MA, etc. Right? Suppose because this is a very long-term chart, you're not being able to see the different parameters in the way I want to show you, right? So suppose I were to take this and plot it for only the last 1,000 rows, this is how it would look. So the person who asked, Mr. YG, every time the price, now over here, okay, the 50 moving, okay, these are the two moving averages and these are the price of Nifty. The slow moving averages crosses the faster moving average crosses the slow moving average. Here a buy trade occurs, and whenever there is a cross on the opposite side, a sell trade occurs. Okay, so this is this is the system. This is only in the last 1,000 candles. So it will just take data from as it is given over here from 2018 onwards, right? Or 2016, sorry, 18 onwards, right? But if I were to give the entire thing, then probably wouldn't be able to see it so clearly. So I just gave you this last 1,000 picture. Okay, thank you, you said. Thank you, thank you. Your doubt is clear. Jerome is saying, so you mean to say over a period of month, this is one trade is being executed, then latency and other factors won't matter. Exactly what I'm saying. That if this was done for a short time, then latency and those factors would have been matter. In fact, even if this was done on 15-minute charts, latency wouldn't have been a very big issue if we're looking at a super liquid asset like Nifty. Okay. But if it is done, if I'm doing something on a minute chart or a 10-second chart or a tick chart, then obviously latency is going to be an issue. So this particular backtest is for an MFT or a LFT strategy, which we're being shown. Getting the point? So here latency is not an issue unless there is a huge liquidity issue. Okay, or if it was HFT, it would have been the latency issues come there, right? Here it is far faster. I mean, if I were to give you only signals generated and you to manually trade on such a system, that also would have been fine. And here when we are coding and the code trades itself, then to every 1/10 of the second, they keep checking whether price have met the condition, right? Okay, I'm sorry, NFT, LFT or HFT stands for what they mean. HFT means high frequency trading. LFT means low frequency, medium frequency is MFT. So this is low and medium frequency. So in HFT or high frequency, those latency issues come, right? So anyway, moving on. I hope we got your answer, Jerome. Otherwise, we can take it offline for further clarity. Okay. So you see that within this box, this chart is coming. So this is looking pretty not so neat. So just let me run all the cells once again. And what happens is that when we are running all the cells, a few of those things will be taken care of. Anyway, so we got the idea, we got the broader idea, right, of backtesting. Is everything clear from that end, right? Now let me just speak about the backtesting parameters, and then I'll come back and show you other things. Everybody with me on that? Everybody enjoying this, right? So it's a slightly longer webinar, but then what you get to learn is also something which is deeper. Any questions? Please ask. Feel free to have questions, right? I'm not giving a break particularly because I don't think you need a break. If I were to need a break, I would have taken a break. But now I don't think it's that. I'm taking it really slow. Jerome is saying he's thoroughly enjoying. Kunal is saying thoroughly enjoying, Kunalji. Okay, Udbhav is asking, sir, what changes would you have to be made on this code to run on real-time data? As I believe this is a backtest on historical data. So the topic of our webinar, Udbhav, is historical backtesting today. Okay, now let's be practical. First, you have to come up with ideas. Then you backtest those ideas. Then you optimize those ideas. And then you deploy the idea. When you deploy the idea, the code for deployment will happen, right? So if I was to suppose code the same thing for deployment, to give it to you in a very easy and simple way, instead of buy at the conditions would be the same, and instead of buy at this and assume this close to be the buying price, my code would have fired the order in the market to buy the certain instrument, right? So that change would have been there, the conditions would have been the same. Am I clear now? And to exit the trade, the code would fire an order of selling in the market to exit that particular position, right? So this is how the thing would happen. The narrative of the back test would actually happen in real life. But this is a very simple way. Again, you could put it on Python, you could put it on C++. MFT strategy, Python is fine, fast enough, not to worry. But first come up with something amazing. Then, deployment is something obviously which we want to do. Everybody would want to do, not a problem, right? Okay, how to integrate with broker like Zerodha, Alice Blue for trading and technical analysis. Okay, so but today's presentation is mostly on the education part of it. I will announce all the details with a different presentation in a different webinar or video, where I will be speaking about the aspects of my course which is coming up in April first week. So let's begin. The first process is data. And then towards the data, when we go, I'm going to help you with all the data which I have. There are free data sources. There are some paid data sources also, right? So you can go to that also, plus what I will give. From there, we come to the core engine part, which is the place where you need to really educate yourself, which you really need to work on, creating something good, right? I will discuss that furthermore later after I finish this point. So this starts from manipulating and cleaning the data all the way to optimization and backtesting and whatnot. Then in the last part, once everything is ready, you understand this, that there is an API you get from the broker, say from Zerodha. So Zerodha is continuously giving you the data and your strategy is being deployed. The moment the data meets the conditions of the strategy, the moment the data meets the condition of the strategy, the trade is fired and the trade is executed. And it's as simple as that. And then there are topics like cloud computing and web services, cloud web services we could get into. But I'm just giving you a simple, and everything is pretty easy and light to understand over here at this stage. And then work on more. Raj is saying, oh, we're working on something for us. Please shed light on that. Okay, so I'm working on. Okay, I'm working on strategies quite a few years, but I have something which is like a set of portfolio strategies, which is almost ready. So I'm having a word with a particular organization to be able to, offer them something. If I don't have the rights to share it with anyone else, then I'll offer it to only them. And if that thing doesn't work out, I will offer it to others also possible. So that will be announced when the right time comes. But yeah, things are going well, and I'm pretty happy that things are coming up. And every time I take up a strategy, I think that, wow, I've struck something which is amazing. Then I actually have a few friends who are analysts similar to me and do quant research, and just go to them, show them the results and reconfirm so that there is no bias. If they have 10 questions to ask, I'll answer those 10 questions to them, etc. So sometimes students have come up with certain strategies and scanners. So that has also happened. So you have a third point of view at times. So all that has happened. Is there a way to deploy code towards paper trading so you can practice in real time? Yeah, you can generate signals and sort of you get in real time. If you want to do something like create scanners, not just trading strategies. And these days you have APIs that can give you on WhatsApp business a message on your WhatsApp also that, okay, your scanner condition is being triggered right now. Okay. So again, my point is that at this stage, assuming that most of you are new to this, first focus on creating a very good core engine. The core part of it, the core engine part of it should be the focus. These things can happen. They are easy to do. These days, you've got a lot of facilities. You've got people who do it for you, some freelancing services for deployment, etc. That's not a big deal. But what you have should be a neat and clean data, data, and reliable parameters, reliable logic, reliable results for a reliable, significant time period. Okay, so that is the thing. Now let's quickly move on to the presentation. If there are any other questions, please ask. Keep shooting, not a problem. Udbhav, I hope I answered your last question. Kunalji, I hope I answered you. Sandeepji, I hope I answered you, right? All that integration is done. It's very common and easy to do also. Not a big deal. Okay, some of you may, I get this a lot. Some of you may have done some other courses where they do some sort of integration and they say, oh, it's a part of our course and whatnot. So please let me tell you, my course is not like this. Here you will be having a lot of technical indicators. You will learn to build a strategy step by step, just like we did something simple right now. We're going to do something far more complex in the middle of the course. And towards the end of the course, there'll be sessions on machine learning also. So it's going to be far more vivid. And generally in the market, the smaller courses you have, they try to talk about algo, then they give you some ready-made script of a strategy which does not have a proper backtest. And probably they just say, okay, fine, we'll deploy this, deploy that, but that's not teaching coding, okay? So teaching coding is an important part of teaching backtesting, teaching strategy building. And within strategy building, backtesting is an important part. So I hope you got the point. As far as API integration is concerned, it is not difficult. It is easy. It can be done. You first get the good ideas in place and get good results, right? Is it possible to code and backtest your own original indicators? Wow, amazing question. So we can practice in real time. Of course, it is very much possible to do your own indicators. And if anybody asks me, each and every indicator which I use to make good strategies are my own. Obviously, I mean, you can't reinvent the wheel. Say, for example, if you're using a moving average somewhere, that is a moving average. But some of the important aspects of indicators or aspects of market mechanisms, I code them myself as fresh new indicators. In fact, I could write a few papers on indicators also, but I don't want to leak it out to the world. So it's that simple. You can code. In fact, let me just do one thing. Anybody wants to see me coding an indicator on the same data? Anybody? I just need a consent from everybody. Otherwise, I don't want people to get bored, right? Chalo, we'll quickly go through the backtest wale points and then I'll show you how to code your own indicator, okay, on the same data. And then you get a good, strong sense of confidence of how to go about it. So, okay, let me just share the presentation and get, with the points. PPT. So, right. So, the backtest part is done with. Congratulations to us. We got it at pretty much one go. I mean, there are a few errors here and there, but that's just normal part and parcel of coding. Then comes the simulation optimization. I think a lot of questions will get answered over here. So the previous years of the market had a certain structure to it, right? And our code worked out and gave us certain results. I mean, this gave us certain uptrending cumulative sum of returns. If you saw that, right? It gave us results. I didn't brag on that result because it's just two numbers and it's not like too sophisticated backtesting. It's okay. Preliminary phase, it is okay, right? So it gave us some results. But what if the future market structure is different? And how do I get synthetic data to be able to test on synthetic data? That's something which is very, very intriguing. So I can use probabilities, and these packages over here use probabilities and a lot of numerical computation, and come to a point where they are giving us a synthetic simulation. If people have heard of random walk theory or have heard of Monte Carlo simulation, yes, that is what I'm talking about. There are other simulations like, I'm not into the very advanced stuff, okay? How boson particles move and whatnot. So this simulation, when it is run, the same strategy can be run on synthetic data, and we can see how it is working out. And that becomes very interesting. Also, what is optimization? So if I was to take, I took, say, for example, 15 years of data over here, right? 2000 we started, right? So 22 years of data or 21 years of data we took, 23 years of data we took. And if we took first 10 years of data and we used 2 moving averages or 3 moving averages, and we did a rerun of different combinations of moving averages and come with the optimized 3 moving averages would be ideal for the first 10 years. And in the next 10 years, which would be called the test data set, we would run the same 3 moving averages, which was optimized on the basis of the trained data set. That would give us the final result. Okay, so that is called optimization. And using that same on synthetic data would be called simulation. How is synthetic data built? It is built on statistical parameters like standard deviations and average returns and what have you, on the basis of the historical structure of the market, right? So this is clear what I said. This was, if this you understood what I mean by optimization, right? Now, last point, the backtest summary. The Sharpe ratio, Sordino ratio, and a maximum drawdown. So I was supposed to write max drawdown because maximum was too long, and it's written maxi drawdown. So please don't mind, it's just a spelling mistake. Okay, so max drawdown, Sharpe ratio, Sordino ratio. What happens with these different? Why have they classified them into 2 different summary stats? Because specifically, what does Sharpe ratio and Sordino ratio look at? Sharpe ratio looks at how much you are gaining with respect to your risk. Okay. How much you're gaining with respect to your risk. So it is the excess returns divided by the standard deviation. Not getting too much into the formula, but if you got an intuition, it's fine. Sordino ratio uses maximum drawdown. So it sees that, okay, fine. It's trying to tell us against the downside risk. Upside risk to bahut acha, but downside risk ke against mein aapne kitna risk liya hai? How much are you getting back? Okay, and maximum drawdown is the maximum drawdown of the equity curve, which we can see from the highest point, the single fall from the highest point before it goes and crosses that point again on the upper side. Okay, so that would be maximum drawdown. So if you started a strategy with 10 lakh rupees, you made 15 lakh rupees, your sort of your net account balance was 15 lakh rupees after say 50 trades, 100 trades, and then you got a loss and your account came back to 13.5 lakh rupees. Okay, and then at the end of the year, I ask you, what is your maximum drawdown? Your maximum drawdown would be 1.5 lakh rupees, because even if you are in net profits, you could still have a maximum drawdown, which would be negative, right? Then let's see the other category, the win to loss ratio, the profit factor, the hit ratio, the normalized hit ratio. Now, all these are mostly, if I were to tell you in a nutshell, net profits by net losses, or average profit by average losses, or probability of a profit or probability of loss. These stats are basically on these lines, where normalized hit ratio being something which gives you a very real picture. So for example, you've got 100 trades and 70 trades were losses, 30 trades were profits. But those 70 trades which were losses, those 70 trades which were losses, they made you a very big amount. Sorry, they lost a very small amount, and those 30 trades which were profits, they made a very big, right? So in that case, the normalized rate ratio would be 0.3 into say 10 rupees per trade, and in the losses divided by the probability of losses, which would be 0.7 into a loss of maybe 0.25 rupees a trade. Okay, so these would be the backtest summary and how we would go about it. If you have any questions, you can ask. So where can we see your older papers? So I said I do not write any paper or anything, simply because I want to keep that to myself, right? If I come up with some strategy based on indicators that I have invented, I want to keep that to myself. Well, in the course which I teach and I've previously taught, indicators based course, only on technical indicators, there I can teach you how to go about it, how to think in terms of computing the volatility of the market in case you're trying to build a volatility indicator, or the trend of the market in case you're trying to build a trend indicator, or the weakness of the market if you're trying to build an indicator which shows you the probability of weakness, or something that shows you the probability of strength. So I can show you and teach you the steps or the thought processes I used to be able to come to interesting indicators. Also, what happens when you change the parameters of indicators which you have, parameters of indicators which you have used earlier. Okay, that also makes a difference. So if I've used say a moving average or RSI or a Bollinger Band, let's make a Bollinger Band right now, and I'll tell you what I mean. Right? Let's create a Bollinger Band. So we've got df.head. You're getting the intuition what I'm trying to say, right? So, right, let's create the Bollinger Band. Isha is asking, trading views having the ability to script and trigger alerts. Want to understand what is the edge we get from Python, how it is different. Oh, brilliant question. Okay, so Isha, let me just put it this way. Okay, everything can be used, not just TradingView. There are other softwares also which give you the option to backtest on reliable data, where you have to do very not so difficult coding. Okay, you can just put it not so difficult as a language. At the base, having strength with one language is very important. So that is always a plus. So if you're deploying something through TradingView and creating the triggers through TradingView, there's nothing wrong with it. That also is how you want to go about it, if it can be deployed into a trading. I prefer, and generally in the industry people don't prefer using third-party software for the ultimate deployment. Okay, even for example, there are a lot of people who use multi-charts in their offices. Okay, many firms, but then the analyst backtest the same thing in Python also. So it reconfirms a lot of calculations. And say, for example, what would be if I come up with something amazing on a Nifty hourly chart, for example? Wouldn't it be nice if I can take, I say my data is reliable, but Isha comes to me and says, okay, fine, sir, please take this data. I have a reliable data. Maybe your data is not reliable. And if I'm able to run the same Python code on your data and get the same results, does not give me that very better, it does not that give me a very good confirmation, right? So this is the reason why it's important for you to, or anybody to learn at least one language and know how to use one language by yourself. Okay, other softwares and all, many things are there, many things will keep coming in the world. Definitely use them. If they're reliable, go for it, not a problem. But having this as a backup or having this as a double confirmation is always better. Okay. Also, say for example, PyScript, a lot of playground I don't get on TradingView, which I get with Python. A lot of playground. I'll show you what it is. Anyway, I hope you got your answer, right? So we've got df dot head. What we're going to do is we're going to use closing prices to find out the moving average, and then we're going to create the middle band using that moving average, because middle band is the 20 moving average conventionally when we take Bollinger Bands. So let's do this. I hope the class is light. I wanted to make it light for the newbies. Right? I know it's a bit longer than probably some people thought, but I think 2 hours was announced from before. I wanted good time for you to have a good interaction. So this is the middle band. Middle band is created. Perfect. So this is the 20 period moving average. Now, what do I need along with the middle band? We need the upper band and the lower band. What are the normal conventional parameters used? 2 standard deviations up and 2 standard deviations down. So let's calculate the upper band to start with. Okay. So what I'm going to do is I'm going to say from the mean, which is the middle band, plus 2 into plus 2 multiplied by what? The standard deviation of 20 periods from of the closing prices, right? So here we use the function rolling dot std, that is for standard deviation, right? So we got this for the upper band, and we are going to just I copy pasted this. I'm going to just make the lower band. All I need to do is type lower band and negative -2 multiplied by st, right? So here we have got, now I do df dot head. What happens? I do df dot head. Now I get some NaN values. Why? Because it will take a while. It will take come 20 candles. It will take to be able to calculate the moving average. So I will do what? D equal df dot drop null values, not a number values, and in place equal to true, just to make it a little neater. Perfect. Now df dot plot. Let's see what we get. We get a number of things. Okay. So obviously I could do a lot of things with df dot plot, but this class is not about visualization. So I will do something about it later, perhaps. Okay. Later, perhaps in the course, if those people who are coming in, I have a separate class for it. We use matplotlib and cboard to be able to, clearly show you how this is done. Okay. So 1 second. Yeah. So we have the middle band. Okay. The close is a problem. Here we go. Okay, now I'm going to, this is a shortcut, and actually generally I teach a longer form of creating the plot, but this is like a shortcut which the matplotlib gives us. So I'm using this to be able to plot all these together, right? So upper band, middle band, upper band, and lower band. Okay, so it's a very long-term chart, if you will see. So it'll look like this. And if I were to make any indicators, right, that would be only for say 1,000 candles. Then it would be the last 1,000 candles. Let's make it 100 candles. So those who are new to indicators, they get a clear idea. And when I do a detailed plotting properly, I can change the colors to according to what I want. Okay, so the closing price is this, the blue line over here. The middle band, you can clearly see the upper and the lower band. Okay, so this is how just coded an indicator. Okay, now the other methods also and other indicators also. So we could suppose I need to use say 10 moving averages together. Okay, let's just be creative. So let me just say moving, I'm just calling a list or moving, and I type 10, 20, 30, 40, 50, 60. Okay, and I say let me just make a function through which sorry, let me just loop for I in moving. Instead of typing it 10 times, I'm going to just write one line of code. I'm going to get as many different moving averages as I want to, right? So dfi is equal to df close dot rolling dot I. So rolling may we'll pass the I dot mean. Okay. So this would give us the result, but there's something wrong. What is wrong? Let us check. Again, I made a spelling mistake. Probably, yeah, that's it. So now I do df dot, instead of head, let's do tail. I get the 10 moving average, the 20 moving average. 1 second. And 30, 40, 50, 60, all moving averages I get. Okay. So I get all these different moving averages. So you saw I could create so many indicators only by a few lines of coding. And backtesting ho ya creating indicators ho, coding is about trying to get the complexity into numbers and then trying to simplify that too, right? So yes, this will be available on YouTube, so I'll share it wherever. And thank you so much for joining. And yeah, if people have questions regarding our upcoming batch on algorithmic trading, which is on specifically on the April 8th, it's a Saturday, we'll start then. It'll be a 20-session full-fledged course. And yes, you will be empowered, enabled to create your own trading strategy and be able to deploy it, be ready with good results. Okay, I have some time. Actually, I don't have a lot of time, but as per the interest of the people, if I, if I was to share some summary stats of my own strategy, I would have done that. But today, I think we're running out of time. We'll do that some next time. So above, yeah, the details of the course, it will be sent to you, or it will be released on YouTube video, a small video of it. It will be released like within a week. Okay, so the reason why the course details I'm not spelling out right now, broader ways I've spelled out already, is because I'm actually interviewing and talking to two different teachers for the machine learning. So the machine learning part is something which is going to get finalized within this week. And every step of the way when I curate a course, I am very careful of every aspect. I have taught technically sorted flagship course for 7+ years now. And now it is a recorded technical analysis course. But yeah, so it will be released. Yeah. And the number and the details of technically sorted, everything to do with us and our contact details. Again, the course will also be updated online on our website. So this is our website. If you go to contact us, you can just drop a message on this number to get an easy response and schedule a call with me. This is the official number, technically sorted. This is the YouTube channel, Amor Patricia. Yeah. So you could go for that. So you can check out more learning, more videos, and get hand-on experience with all of it. Right. So this is the number. Thank you, Mohji. Good session. Thank you so much. It was a wonderful session. Many people have left only because it was a little longer than they could take in, I guess. But I love the enthusiasm. I know a lot of people who messaged me before the class that, okay, sir, I'll watch the recording for sure. I couldn't come today. I have some commitment. I have some office, office work, etc., and so on. So anyway, thank you so much. God bless, and hope you learned something interesting and your mind stretched beyond what it already knew. The aspect of learning is something which is very close to me. And I personally feel that when we learn, we expand, and we talk to a very deep level joy within us, which, and if that joy, that is $1 million feeling, then eventually it, automatically translates into the material format. Yeah, surely. Let's meet again very soon. Okay. Yes, you can send the number to the, send the WhatsApp message there, and your number will be stored. And if you specifically want, okay, send me the details of the course as soon as they're out. The PDF and the YouTube video will be sent to you as soon as it is out. Okay. Thank you. Have a good evening. Bye-bye. And thank you so much. Yeah, those who are from other parts of the world, good night, good morning, and good afternoon. Thank you, sir. Looking forward to more into Algo. Thank you, Anandji. I think you should definitely follow me on LinkedIn and join. I do have a old WhatsApp group just for webinars. We'll add you there. You can just drop in the official, number. You can drop the message. Okay. Take care. Good night. Yes, thank you so much. I'll take your leave. Bye-bye. Enjoy.